Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, August 27th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we got a ton of stuff to talk about. First, let's start with the fact that she's up 0.23%, making new all-time highs. We had some post-market activity today, as NVIDIA came out with earnings after the close. And if we just take a look at the 5-minute chart in the extended hours, we can see she had a nice move down. This was almost a 45-point move, $4.50, and she rebounded pretty nicely. But during this decline, she finally made it to our support zone that we had early in the morning, found support off of it, the numbers work. So we're going to work backwards today and start with inside the numbers because there's a lot of good stuff in here that will help formulate the picture of what's going on and what actually happened today. So the first thing that I want to discuss is this extremely uber important number and a overhead resistance zone at 647.30 to 648.40. This has been a zone on the board for probably the last 2 to 3 weeks, give or take. This is a zone that's essentially in uncharted territory, above all-time highs, and I've mentioned it in the notes a bunch of times on how important this zone truly is. It's a place where the market shouldn't just waltz right through. I know for a fact I said that at least like 10 times when I talked about this zone. How ya doing? 647.30 is on the board. Not only did she hit it once, pretty much right on the dot, but she hit it twice right on the dot and couldn't get right through. This was a place where the market shouldn't just waltz right through. I was pounding the table on this number. How many other people give you a number in uncharted territory at new all-time highs that actually work? I'll tell you this, it's not a lot. We finally got to the number towards the end of the day, so we weren't able to trade this during the morning session, but if you managed to scoop it, this turned out to be a nice trade. Look at this right here at 8:50 before the market even opens. The first real zone of overhead resistance and a place where the market shouldn't just waltz right through, 647.30. What about 10:23? We're grinding up higher. There's an important zone, 647.30. It's an important zone for the market. I was pounding the table on this number. But that's not all. Something else that I find interesting is after the market closed when NVIDIA released their earnings, she came back to the important support zone that we had early in the morning. Now, we never got there this morning. We were close, bounced away, never looked back. It was pretty much a floater tape today. This wasn't a trader's tape, but it's kind of funny how they came back to the important support zone. Here's the 0 dark 30 notes, and that zone was essentially the bear pivot, 643.50, and then below the pivot, there's a number at 642.45, and there's a midpoint phenomenon number at 643.10. So we're looking at the extended hours again. The support zone is on the board. Here was the overhead resistance number at 647.30, spiked it by a touch, post hours, came right back down, and where to? Midpoint phenomenon number. Came up a few cents short. But this entire zone of support was important. We were looking to pull off a trade early in the morning if we got here. Unfortunately, we didn't, but it's funny how she came back for a revisit after the market closed. And it's safe to say that the numbers work and the midpoint phenomenon is real. It's not the exact midpoint, it's a mathematical number that I had that's in between the zone, but it's close enough to call it the midpoint phenomenon. So those numbers were exclusive to Inside the Numbers and Live Room members. They had those numbers ready well before the market was even open. And speaking of exclusive numbers, we had a Live Room exclusive trade for Abercrombie & Fitch. Here's entry number 1, entry number 2, and the stop. She nailed entry number 2, spiked it by a few cents, but pretty much right on the dot. And look at this move. Absolutely a rocket ride whopper with cheese. She made a high of 99.94, almost the big fat round number at 100. Funny how that works. Those numbers are important. Sometimes they hit it right on the dot. Sometimes they come up a few pennies short. Sometimes they spike them through by a few cents. But those numbers are important. And it's safe to say that we had a ton of members making money in Abercrombie & Fitch, exclusive Live Room trade. If you took any of those trades, help a brother out, let us know in the comments below. And also don't forget to like and subscribe. Whether it was the Abercrombie and Fitch trade, the overhead resistance in the spiders, whatever it was, let me know. I love to hear how you guys are doing. So going back to the spiders, although we did manage to reach new all-time highs, today was a pretty normal day. No surprises, no trick, trap, fool, and frustrate crew. She was a stone's throw away of the all-time highs, managed to reach the new all-time highs on declining volume, so she's just grinding up higher, almost like it's eating time off the clock, getting ready for a big move. Whether that move is up or down, we'll find out sooner or later, but today wasn't really that surprising. But it's interesting to note, and here we are on an hourly chart, we keep poking our heads above all-time highs like we did right here in this area, and then we came back down, possibly to retest some lower stuff. Okay, here we are, making new all-time highs today, and then right after the market closed and NVIDIA came out with their earnings, she came right back down. If we take a look at NVIDIA, just from a technical analysis perspective, again, we're at the hourly time frame, look at what was happening right here for the past few days. She was eating time off the clock around all-time highs. We had a decent move down, and then coming right back up, trying to retest the all-time highs in this vicinity, and then she came out with earnings and came right back down. Here's the move on the extended hours. She made a low of 171.86. But again, looking at it just from a technical analysis perspective, she wanted to come back to the place where she was previously eating time off the clock. That's normal garden variety behavior. Charts and all charts act and react the same way. They love to come back to the most recent place of where she was originally eating time off the clock. It's just basic chart patterns. If you took the E-mini and the MSF Masterclass, you know exactly what I'm talking about. And as the cherry on top, take a look at this breakdown candle high. The high was 182.50, and what was the high right here? The high was 182.49. Came up 1 penny short. We'll just give that a funny how that works. Remember, as traders, we're building the full stack, stacking the reasons on top of each other to give us the highest probability of a successful trade. Now, this doesn't mean we were necessarily trading NVIDIA, especially when they were right about to come out with earnings, but these are the things that we do as traders. We're building the full stack. We had a consolidation period right here, eating time off the clock. We know that markets love to come back and retest those areas. And we had a big time breakdown candle high that she came up 1 penny short. And now the next destination that NVIDIA is going to want to try and go to is the most recent place of when she was eating time off the clock, right here. This entire week, we've been eating time off the clock around this area. So that will be the next destination. Not calling this as a trade. I'm just letting you guys know the next target, essentially. So I know I'm kind of flip-flopping all over the place, but I'm going to start to put all of this together and start to create the bigger picture. So here we are in the spiders, and essentially what keeps happening is we poke our heads above all-time highs and then come back down, poking our head above again and then came right back down. Now we all know that the Mag 7 makes up a huge portion of the S&P 500, NVIDIA being number one, and when NVIDIA came down, the spiders went down. We all know that. So the top 10 stocks of the S&P make up around 40%, give or take, of the S&P 500, and only 2 of them are not tech companies. So it's pretty safe to say that the tech companies and the semiconductors are the one that's driving Mrs. Market. And let me expand on that. Today we had some other news. So today we essentially put a 50% tariff on India. All right, that was earlier today, but that's the old tariff schmariff news. We've been hearing about tariffs for it seems like an eternity. So I would say that's a pretty big deal, as 50% is a lot, as we do trade a lot with India. But as you could see from today's activity, the market didn't really care about that news. And again, it's the tariff schmariff talk. It's not new news, but the talking heads on TV like to blame it on that stuff, and it's usually after the fact. We all know how that goes. It's a whole bunch of horse crap. And the other piece of news today is that Trump is trying to fire Federal Reserve Governor Lisa Cook. They're going back and forth. Trump says you're fired. Lisa Cook says he has no authority to do so, blah, 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 whatever. It's all a bunch of shenanigans. But as you can see, that had no effect in the market today as we just continued to grind up higher. But what did have an effect was NVIDIA, the number one leading stock in the S&P. So now I'm going to jump to the semiconductors. For those of you who don't know, the SMH is the semiconductor ETF. It's basically the bracket of all the big chip stocks, including NVIDIA, AMD, Intel. So the SMH essentially tracks the entire semiconductor sector. It's the backbone of modern tech, and it's booming right now because of AI. Now I have two charts on the screen. On the left side, we got the S&P on a weekly time frame, and to the right, we have SMH, the semiconductors, on a weekly time frame. And I want to point out that these charts look extremely similar. Remember what we talked about yesterday. They are both extremely extended from home base, almost around the same distance compared to each other. If we grab a trend line tool, attach it to this 20-period moving average to the low right here around there, and then we'll copy and paste it over to the other chart, it's essentially the same distance, give or take. It's not the exact same, but we'll go with the give or take. So they're both extremely extended from home base, and the markets don't like to be too extended, and the semiconductors is what's driving the market, the S&P, right now. The S&P is supposed to be diversified, and like I said before, the top 10 stocks, and only 2 of them are not tech companies, it makes up around 40% of the S&P, give or take. And the S&P is supposed to be a diversified portfolio of the 500 stocks within it. But the key major players, like NVIDIA, Intel, Microsoft, all those big-time tech companies, is what's driving the market. So going back to SMH on the daily chart, I drew a line at 291.91. That was the low from the post-market move that we had from NVIDIA's earnings, and she came back down to retest the 20-period moving average. Normal garden variety behavior. Again, markets don't like to be too extended from home base, so it's not really surprising that we came down to retest it one more time. And this won't be the last time. She managed to fight back above it, and we're staying above the 20-period moving average, above all the moving averages. The trend is your friend, but I think it's safe to say that we can use this in correlation with the S&P, but I think we can use this as kind of a canary in the coal mine situation. Obviously, there's no warning signs right now. We're still above all the moving averages. We did come back for a retest of the 20-period moving average, but with time to come, if we start seeing some unusual behavior in SMH, like starting to close below some important numbers and or the moving averages, we can use that as kind of an early warning sign in relation to the S&P, canary in the coal mine. That's just my take on it, of where we currently are and where the money is at in the market. The money is in all these tech companies. It's the driving force of the market right now. So if we start to see some things change in SMH, we can try to use that to our advantage. Again, not to mention, we got a tinfoil hat event coming up later towards the end of the week, next week. This is the second blood moon. It's also a total lunar eclipse. So if you guys have been with MSF for a while, you know that these events are important. You can believe it if you want. Usually the market likes to take a turn coming up towards these events, during these events, or after. They're important, but do what you want with that information. Not to mention, one more time, we're extremely extended from home base, and markets don't like to be too extended. The market keeps poking her head above all-time highs, but doesn't really want to seem to get going. Maybe this was an exception with NVIDIA earnings, but it's a common theme that we just need to take note of and put it in our back pocket. I put the number 632.08 on the board. This is the Irene number. We came up close earlier last week. Didn't manage to touch it. That is some bullish behavior, but getting below and starting to close candles below 632.08, it's a flare up in the air. Let's go ahead and take a little lazy swing trader intermission break. This time we had Box with an entry price of 31, and she hit her second profit target, locking in a 7.11% gain. She had pretty much a bonanza day because she had earnings after the market closed yesterday. So we managed to pull off the second profit target, almost came back down to the original entry price, and then she managed to fight her way back up towards the midpoint of this big candle. We did alert members that Box was coming out with earnings later that day. And for my lazy swing trader members, you guys are going to like this one. We're still working on it. It's not fully developed, but we are working essentially on an alert system that will notify us if an open position is coming up with earnings. It's just for your awareness. Again, it's trader's choice if you want to stay in the trade if earnings come out, or if you want to cut it short. Entirely up to you, but we're just letting you know. It's an awareness thing. So that will be something to look forward to for Lazy Swing Trader members. Always working on improving the Lazy Swing Trader, as it is our bread and butter. Nice trade for those who took it. What about Camp IWM, my #1 favorite market leading indicator? She's up 0.71%, and she is approaching the 237.77 number that I told you about last night. This is overhead resistance. It's a place where the market shouldn't just waltz right through, at least from an intraday perspective. So that's the next target towards the upside. We are the umpire, so we have to look at both sides of the tape. She could come up short, she could spike him through, or she could nail it on the dot. But this is an area where she shouldn't just waltz right through. On the downside, we got this big time breakup candle low. Then we have some unfinished business down below that also coincides with the 20 period moving average, which we are currently extended from. So that's going to be an important area. But there's nothing wrong with the chart. Above all the moving averages, the trend is your friend, and that's what we got for Camp IWM. But again, she is coming up to a key overhead resistance area. What about the folks at the transportation department? She continues to essentially eat time off the clock. She's only up 0.14%, so $22. Yesterday was $48. But again, she's still below and closing candles below the big fat round number at 16,000. Most likely wanting to head to a test of the trifecta of the moving averages, 100, 20, and 200. This is an important area. It's all the moving averages all in one spot. You got this big time breakup candle low. That's the most recent one. You got this unfinished business, this gap right here at 15,589. So that is an important area for the transportation department. My second favorite market leading indicator. What about the Q people? She's up 0.15% and she's still closing candles above the 20 period moving average, home base. She keeps toying around with that area, but it's important to note that we're still above all the moving averages. So the trend is your friend, but we are close and things can change in an instant. So we'll keep an eye on the Qs. But for now, the main target on the upside is going to be the most recent breakdown candle high. She hasn't reached it yet, but that is the next destination. What about XLF? Well, she continues to grind up higher, making new all-time highs. She's up 0.20%. She is becoming extended from home base. You got the entrance to no man's land right at 52.95. Below that, you have this unfilled gap at 52.70, with the 20 and the 50 period moving average creeping upon it. But for now, she continues to grind up higher, making new all-time highs. And we know the drill. If there's nothing wrong with the financials, then there's nothing wrong with the overall structure of the market. And the financials right now are extremely strong. But as of right now, we know that the big time players, the big tech companies, is what's moving the market. We have 2 more trading days this week, so it'll be interesting to see where we end the week on. On the weekly chart, we are above all the moving averages, so the trend is your friend. We got this big time breakdown candle high, came back for a revisit of it, spiked it by a little bit, but still managing to close candles above it. That is bullish behavior. Using these breakdown candle highs as resistance on the way back up and support on the way back down. So getting below 53.38, first destination is going to be this weekly breakup candle low, and then possibly heading to the 20 period moving average. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. Don't forget to like, comment, subscribe, all that good stuff. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope everyone has a great rest of your day and take care now.